On the show. Mahesh, good evening, and what a great day to actually have you, given the markets are at a historic high. Talk to us about, what you've made of the run-up that we've seen on the Nifty, especially in the last, 1,000 odd points.
Well, I think initially we have seen that in the last 1,000 points on Nifty, post the election outcome and post the budget, I think there have been some sentiments have been positive. There are two factors. One, in the domestic side, we have seen the macro data points which have come in are at the margin turning to be positive, whether it is the inflation number which came in, which was also a better number. We have seen the IIP number for last two prints has shown a pretty decent jump. The auto sales number also showing a healthy trend up. Cement dispatches are also showing strong numbers for the last 2 to 3 months. So I think the domestic macro, definitely from the bottom, what we have seen is showing signs of improvement. More importantly, on the global front, also we have seen some of the the risk which were emanating, especially from Middle East and Ukraine. So these are also kind of dissipated. Oil also has, after peaking out at $115, is now close to around $100 or so. And globally also we have seen a kind of risk on environment, liquidity pumping into emerging markets, and that's what has actually driven the market. So we have seen a significant P re-rating of the market in the last 3 months. I mean, earnings haven't really been upgraded to that extent, only marginally, I would say that. But essentially the P rating on the expectation that you would see better earnings growth domestically in the future, and globally risk appetite again coming back.
Mahesh, how much of this rally which we are witnessing right now is because of the India story, and which is pretty much well known by now, and how much of it is due to global rally also, which is quietly underway, especially past couple of days?
So if you look at India, would have probably outperformed the other emerging markets in the last 3 months or so. So partly it's evident because of the global rally what we have seen across emerging markets. We have seen good inflows into emerging market funds, and India has received a larger share of that. But I think partly is also because of the improved sentiment here on the domestic side, and with the longer term picture for the Indian economy looking much stronger, and possibly one of the few large economies in the world where you could see the GDP growth over the next 4 to 5 years can potentially double from the lows what we saw around 9 months back, which was 4.5% or so. So I think it's a combination of both. I would say probably 50% domestic and 50% global factors which are contributing to the outperformance.
Mahesh, how are you assessing valuation in the market right now at elevated levels? Because since the February levels, we've gained about 29% on the market.
So the valuations are now, if you take a 1 year forward based on the earnings projection what we have. So we are looking at around 16% earnings growth for the Nifty companies over the next 1 year. And on that basis, I think the multiple would be somewhere close to around 16.5 times, which is probably around 10% higher than the long-term average multiples. So to that extent, the market is no longer cheap. It's slightly above the long-term average also. But I think the earnings outlook is something which is going to be key in terms of how much the market can even re-rate even from these levels. So as one gets visibility that the growth can accelerate in the next few years, I think there could the market can even re-rate even from these levels.
Mahesh, how are you assessing the kind of, capital flows that we've seen come into India, both portfolio as well as FDI?
So the global flows has been pretty good, as I mentioned earlier. I think global flows into risk asset class, despite concerns about tapering and eventually rate hike in the US. But that event is probably sometime away, sometime in the next calendar year. So until then, we have seen steady flows across global equity markets, and most of the even developed market equities, S&P also is an all-time high. So we have seen steady inflows, and while if you just dissect the flows, a lot of the funds are still through passive funds and to the emerging markets, but we haven't seen flows specifically to India dedicated funds in the recent past. And on the domestic side, however, we have seen significant improvements in the month of June and July, which were very good months for inflow into domestic mutual funds, and that trend is continuing. So I think both on domestic side as well as from FII flows, I think that liquidity has been pretty good, and that's one of the reasons why the markets have been scaling new highs despite no any major significant change in the fundamentals.
Right. You know, Mahesh, earlier on, you did allude to the fact that the data as far as auto sales in August goes look pretty encouraging. Given that, how are you positioned on the auto sector? Does anything look good to you there, especially say in the auto ancillary space?
So in the auto sector, we've got the four-wheelers and the two-wheelers and the commercial vehicles. These are the three broad segments, okay, which you look at from an OEM perspective. We already seen decent improvement in the four-wheelers space. I think the pricing pressure is kind of easing off. The discounts which have been offered, we expect that to slowly ease off over a period of time, and as volume growth also picks up. So that would lead to not only volume growth also, but some margin improvement, okay, for the players over there. In two-wheelers, while the motorcycles segment is still sluggish, we have seen a good growth in the scooter segment, but overall I think the segment is now picking up. I think incrementally I will see better growth coming in from the urban centers. I mean, urban demand had got impacted in the last 2-3 years. It was rural India which was driving the demand. We see a shift on that going forward. Rural demand is kind of slowing down because rural, we have seen that the impact of higher MSP prices and wage growth is kind of moderating down, whereas on the urban side, I think as the outlook improves, you should see the demand picking up over there. So, so the two-wheelers also, you should see the urban demand slowly picking up. And on the commercial vehicles, I think it's early days, but we have seen some revival happening over there. We have seen commercial vehicle sales at an all-time low just a few quarters back, and from here on, I think we should see a slowly uptick on the commercial vehicle side also.
Mahesh, let's talk about the oil and gas space then, where ONGC has been a strong performer lately, but RIL is lagging. Do you expect some clarity on gas pricing issue in the near term?
Yeah, so oil and gas sector has been to large extent driven by the policy of the government. I think the one good thing was at least on the downstream side, we have seen that the subsidy on diesel because of the continuous increase in diesel prices is now almost zero. So that should help improve the balance sheet for some of the oil marketing companies. For the upstream companies like ONGC and Oil India, the gas pricing is something which needs some clarity on that. I think one should expect in the next few weeks, because if ONGC issue is to really go through, I think government needs to give some clarity in terms of subsidy sharing or on gas pricing. I think that is something which one would be awaited. But overall on the oil and gas sector, in the petrochemical side, we haven't seen the refining margins have remained pretty subdued. So, that on that front, we haven't seen any significant improvement, because that's more linked to the global factors.
Find us on Facebook at facebook.com/etnow, and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.